It's November, so it's time again for my favorite stock of the month. This one is going to be familiar for those of you who have been watching a lot of asymmetric investing, might be subscribed to the newsletter. That is On Holding. I think this is one of the best companies in apparel today. Phenomenal growth rate. They increased their guidance when they reported second quarter results. Third quarter results are going to be out next week. But this is now becoming almost a value stock, and a value stock that's growing at 30% year over year. I think the fundamentals are phenomenal. The product is phenomenal. Innovation is great. And the market just doesn't seem to understand what value there is in On. So I'm going to dig into what I like about this stock today, why it's one of the stocks that I added to the asymmetric portfolio. If you're interested in everything that I'm buying for that portfolio, this is a portfolio I started from zero. I'm buying stocks once a month. I do all of this in public through my newsletter, Asymmetric Investing. There's a link on the screen and a link in the show notes if you want to become part of that community. Love to have you there. And I also want to thank this video's sponsor, Fiscal AI. If you're not familiar with Fiscal AI, this is a phenomenal research tool. It has everything you need. You can see right here, this is just the overview page. So all of the financial information you need. And it's very easy to make charts that show things like revenue growth and operating income. Transcripts are here, research. You can see who owns stocks, who is buying and selling, everything all in one place. This is the best research tool that I've ever found. It's a site that I use constantly for my own research. So if you want to try out fiscal.ai, go to fiscal.ai/ASYM. You can try it out for 2 weeks for free. Then you can get 15% off with that link. What you're going to be seeing here is actually the enterprise version. That enterprise version has 20 years of data for companies where it's available. On isn't that old, but if you're a serious investor, definitely something you should check out. So let's dig into On. And the reason that I am excited about this stock and want to continue adding is that shares just continue to drop. This is early 2025. You can see the shares are down 40% since then. And I don't think it was all that expensive of a stock even then. Enterprise value to sales, 3.5 for context. Nike is trading for 2.1 times sales. So less than double the price for On. Nike has negative revenue growth on 3 years, 42.6%. I'm going to get to some of those guidance numbers and how they changed guidance in just a little bit, but let's just dig into their financials. And one of the things I'm going to do here, I'm going to do this in US dollars. One of the things that's a little bit confusing about On is it is a company that's based in Switzerland, so they report in Swiss francs. This always confuses the market when quarterly numbers come out because they have to mark their US dollar assets. Really, their currencies all around the world, but the US dollar is the one that has been dropping. They have to mark that to market. So if they make sales in the US, those sales actually look smaller if the dollar is getting weaker like it has been in 2025. The dollars that they're holding in, let's say, a US bank also go down in value in terms of Swiss francs. So Swiss francs is like the lens that financials are being reported in. That's why you're going to see things like a loss on currencies. I'll get to some of that in just a second. And constant currency revenue growth being higher than reported revenue growth. So this is in US dollars, and all this is doing is transferring Swiss francs to US dollars. So it isn't quite a US-centric lens, but at least the numbers are a little bit more understandable if you are a US investor. You can see $3.4 billion worth of revenue, operating income. This is really the important number for them. $371.6 million. The reason that this is so impressive is you can see this compound annual growth rate. This is since September 2022. These are all trailing 12-month numbers. That is an incredible growth rate. And it's very difficult for a hard goods company like an apparel company to grow that quickly and grow profitably. So that's what's so impressive with On Holding right now. They also have a nice balance of wholesale and direct to consumer. Blue is the wholesale revenue number. Orange is their direct to consumer number. So you can see a little bit bigger in wholesale. That means that they're taking market share from companies like Nike, but then direct to consumer is also very high. I also want to put into context the growth potential that On has. I'm going to compare them to Nike in just a second. But look at this. This is shoes in blue. $3.2 billion worth of revenue, almost no revenue in apparel. Now, if you're not familiar with their apparel, they've really just started to grow this business. I've got a sweatshirt from them, just phenomenal quality. Yes, it's very expensive, but that's exactly what the On brand is doing. Very high end, very expensive, but also very high quality. So I think this is a segment that's going to continue to grow. It's got a solid compound annual growth rate of 61.3% since 2021. But as you can see here, a ton of growth runway. This business, this apparel business alone could 10x in size, and it wouldn't even overtake what shoe sales are today. Same thing with accessories. Again, not going to be a huge business for them, but something that can be additive to revenue growth overall. I mentioned that comparison to Nike earlier. You can see here $3.2 billion worth of revenue for On in the shoe business. Look at Nike's revenue in the shoe business, $29.5 billion worth of revenue. So if they continue to take market share, and you can see that they are definitely taking market share, Nike's in decline, On is still growing, but there's potentially 5x, maybe even 10x revenue growth potential for On. I still think this is going to be a high-end shoe brand, so maybe this isn't going to be as big as Nike because they're not going to go after that big of an addressable market, but a lot of growth runway ahead. And just for some context, the recent quarterly numbers, these came out August 12th, 2025. But you can see here some of these sales numbers. Sales increased 32% year over year, but on a constant currency basis, they were up 38.2%. That's that impact of the declining dollar that I was talking about earlier. So constant currency sales up much more than reported sales. If they were just reporting all their numbers in US dollars, their growth rate would be much closer to this 38.2% number because the US is their biggest market. The other piece you want to keep in mind is when you look at financial results is this foreign currency exchange gain or loss. So in the most recent quarter, they had a 140 million Swiss franc loss related to foreign currencies. Most of that is going to be US dollars that's probably held in the US, just hasn't been converted to Swiss francs. If you're a US investor, that's not necessarily a bad thing. But if you're a Swiss investor, let's say, that means that that Swiss franc getting stronger versus the dollar is making those sales in the US look a little bit smaller. So those are the two impacts that you're going to have with the currency changes that you're going to get from the company reporting in Swiss francs. But here's the other thing you need to keep in mind. This is basically halfway through the third quarter. They increased their guidance. They said that they now expect the full year revenue to be up over 31% from a previous guidance of at least 28%. Gross profit also expected to be over 60%. They said a couple of years ago that their long-term goal was to be able to get to 60% gross profit. Well, they're over that right now. So as you can see here, everything is going extremely well for On. And the wild thing is their stock continues to go down. This is their stock price right here. As I'm recording, $36.38. Price to sales multiple, just 3.6. Go back to 2022, that price to sales multiple was 17. So the multiple is going down despite the fact that their revenue growth rate is going up and their guidance continues to go up. Everything is going well for On. Everything that we have seen them report is actually really positive. The market just is still selling off the stock. I think this is probably the market just selling off apparel companies, the companies that may be impacted by consumer spending, maybe even tariffs. But as far as we know today, On is still expecting to be growing over 30% year over year in 2025. We will see what their numbers look like next week. That will either kind of confirm or deny this bullish thesis that I have with On Holdings, but I think everything's going well, and I'm happy to buy shares at a very, very cheap price and just be a long-term buy and hold investor here. But let me know what you think about On Holding. And like I said, if you're interested in everything that I'm buying every month, go to Asymmetric Investing. Those buys went out this morning, so you can check that out if you're a subscriber, asymmetric-investing.com. Love to have you as part of that community. Thanks for watching, everybody. See you here next time.